Dare I say the bulls are in control of this market? They bought the dip yesterday. They bought Boeing, Tesla going up after their earnings. Service now finds buyers after a big dip. We got some airline earnings. And if you want to talk about a monster buyback, Chevron Corporation, 75 billion. Holy smokes. Let's talk about that. We got some numbers coming up, some economic data at 8:30. Maybe that will throw a monkey wrench in the rally. Raghee Horner is going to join us too. Folks, let's get to the earnings. Let's get to this rally and let's try and figure out where this market's going today. Pre-market prep.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elkanin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, traders and investors, let's take a look at the S&P 500 index futures up 23 handles, 4055. Not much of a dip off that triple closing price area. Let's just call it 4034. Took out Monday's high. That's a good thing. You want daily resistance? Well, I don't have any for you. The buck is up 17.9 cents at 101.59 and a half. Let's call the bonds down not much, quarter point. 130 and 20 seconds, kind of a quiet day in the bonds. Crew didn't like being under $80, up $1.30. We got that target on the upside, the three highs right at the 82.60 area. Gold backing off, down 580, 1936 9-day, still having a good run, hanging up near the highs of the move. Silver, that's basically flat at 23.93. Really can't get over that 24 hump. And Bitcoin back in the 23 handle. We're up $225, 23,330. Let's bring in Triple D and Mitch. And man, nice comeback yesterday in the market. You can't deny, man. The buy the dippers are out there.
Relentless buying the dip, Joel. And yes, it was predictable that after we saw the dip buy in Microsoft, remember again, all the market is taking the information we get and making more conclusions and looking at relationships. So it was very predictable that all the major earnings would get bought if they dipped at all last night after the major Microsoft dip buy that we saw in the afternoon. So, yes, you saw the dip, slight dip in Tesla get bought last night. Tweeted that out beforehand. But stocks like ServiceNow were down $40. Buy the dip. Too much money on the sidelines. Too many bearish views, including myself. I've been bearish, obviously, as well. And you know what? The bulls are winning.
All right, let's get
Silence
into the
on
action.
That, Mitch doesn't know what to say because he's been one of those bears too.
Yeah, I just put it this way. I'm still in the camp. Looks like Dennis is starting to light the fire, but can't blame him either.
I just trade what I see. I'm trading biased long. I'm still lots of cash in the long-term portfolio because I'm trying to make a long-term call there. But apparently the cash right now, apparently I should have just went all in January 1st in the seasonality and forgot about it. That would have worked out well. Unfortunately, right. I did not do that.
Well, let's talk, of course, about the stock that at least kept things at least bouncing back, charging forward. Let's talk about Tesla. Q4 EPS coming in at $1.19, beat the $1.13 estimate. Sales at $24.32 billion, beat the $24.16 billion estimate. Tesla's report Q4 total production up 44% year over year. Reported Q4 total deliveries up 31% year over year. And then automotive revenues were up 33% year over year. Tesla did say it expects to see above 20% automotive margins and 47,000 average selling price.
The numbers were fine here. We knew and we said it on this show that he's not going to talk his stock down. He's not going to we see soft demand. It's not his style. So you knew the guidance was probably going to be fine, even if he saw, he'd find the silver lining to talk the stock up. So that's Musk. He's not sitting there conservative. He's always aggressive. So I was confident that the guidance is going to be fine too. Yes, I did stay my Rivian. I have sold a piece of it. I wish I would have sold it all, obviously. Tesla 150 price target is hit as well. So obviously we said this was 125. Thought the road to 150 was there. It does hit that road here this morning. Through it though, breaking out 154. I'm not chasing in this environment. Again, and I know people keep doing this, but again, this is not the environment to chase stocks in, because it seems like when we get another pullback, we just keep ripping and then we keep dipping and then we keep ripping and then we keep dipping. Definitely the trend is higher, but there's been so many dips to buy, including yesterday morning, that I don't think there's a reason to chase. I don't know what there's going to be. Maybe it's just going to rip forever and it's going to go straight back to 410, then 420. I do think there's room to 410. I fully think the bulls are in control here right now, but I'm not buying rips. I'm buying dips.
Nice move in Tesla here, taking out the pair of highs at 146.50 area. So it's a little bit easier for me to give you support here. I'd love to see a 8-9 point pullback, maybe not today, but over the next couple days. On the upside, you just spiked to just a little over right to 155.95. So 156 if you're looking for a target based on the pre-market trading. I just when I just glance at this chart, this daily, I'm gonna make it a little bigger. 161, 160, 161. There was 3 highs in a row in that area, and then that's before you had the big dip. So I don't know. I mean, that's to me, that's the next logical stopping point for it. But first things first, let's take out that pre-market high of 156.
And,
All right. So
Duncan Dave, so Tesla, so goes the market. Absolutely, when you're getting only one major earnings report on a night, it's going to drive the bus. There's absolutely no doubt. The Tesla earnings, there was stock basically kind of sat down there for a couple hours really after the report. We chopped around a bit, but then we started on the conference call as what drove it. He came out on the conference call, was full on bullish. It was a bullish conference call, which is again predictable. The guidance in the conference call, you knew when Musk starts talking, he's not conservative. He's not going to talk like, oh yeah, it's not going that well, even if it isn't going that well. And his bullish talk, because algos take everything at face value, his bullish talk drove this price. And once Tesla started going after 6 o'clock, the S&P started going as well. So absolutely Tesla driving the bus, just like Microsoft drove the bus yesterday.
Yeah.
Tesla driving the bus here today. I know there's 100 other companies that reported, but it's Tesla that everyone is focused on.
Right.
All right.
Go ahead.
I got some comments here from Gene Munster, managing partner at Deepwater Management. Of course, covers Tesla consistently. So I think if anything, he'll definitely catch the important moments in the call. He talked about the essence of the guidance call for 50% delivery growth this year, ahead of the street's 37% target. Gross margins X credits above 20% compared to the concerns of many investors that they would dip into the high teens. Of course, these concerns came from when you started seeing the vehicle prices coming down, right? He gave 3 reasons that were really important that could push Tesla well positioned to keep going forward. He said if Tesla meets the internal delivery target for 2023, they increase delivery growth from 40% in 2022 to 50% in 2023. Expect 2023 gross margins above that 20%, higher than the feared. And then Cybertruck is on track to start deliveries later this year, along with hints of new models. I will give you guys that article if you guys want to read a little bit deeper into Deepwater Management's outlook into Tesla there. Also going to share that with us. Gene Munster always comes on and gives us some good information, so wanted to share that with you guys.
I mean, Joel, technicals on this, just quickly on Tesla again, because we're breaking out through the critical 150 that we talked about. We're 154 here in the pre-market. Okay. Where are we heading? Like, do you have?
Short. Yeah, I'm just gonna stick with that 160. Yeah. I mean, there's 3 highs. I mean, that's nothing. That's 5 points from here, right? And there's 3 highs in that area. It's already now. You just have to remember the straddle was around $12, right? Mm-hmm. And as our buddy CC tells us, a lot of times that the those ranges can put a cap on it. So 156 is, to me, is the roadblock between here and 160, 161. There's 3 highs in that area. And as I stated, on the downside here, if you're not a chaser and you're looking at old resistance, new support, pair of highs at 146.50. So you look for that for support. I mean, longer term, I mean, if you want to get on the super bullish Tesla train, right? 4 I'm not even going to figure the retracement, 440 down to 100. There's so many retracements that, that you could draw before you even get to the 50% retracement. Does it have the tank and the, gas in the tank, something like your Netflix? I mean, it's still moseying its way back up. I don't think it ever got to as low of Tesla has got to a low, as a valuation point. But I mean, at this point, and we've discussed this, Dennis, over the years. I mean, yeah, these stocks went down really hard, but a lot of times when they rebound. So that's it. That's just my target for today, or the next couple of days is
It's
161.
still in massively oversold conditions. So,
Yeah.
I mean, these stocks can do some stuff. It's not out of the realm of possibility that Tesla could see $200 again. It's not out of the realm of possibility.
No, not at all.
Now, I'm not saying it's going there today. I'm not saying it's going there tomorrow. And I'm not saying I'm chasing it here. But I'm saying on dips here, the bulls are in control here on Tesla. So you've got to respect that. People still asking, yes, I'm still long Rivian. I said $20 is my target. 1935, getting close to that right now. I don't know. We'll see.
I kind of like to see a hold on to that one.
Yeah, no long term.
We gotta have some.
Dennis?
Well, it's a swing, but you know what? You can turn swing. And again, I'm not a big believer in valuation on Rivian long term. But right now, I'm not going to argue with the trend. The trend has turned on all these growthy stocks. Look, yesterday, like we were gonna, take the trend out and they were gonna go down, and they just bought the dip on them all again. So, I mean, you can't argue with what's happening. The money managers are sitting there, too much cash. They're buying every dip possible. Look at ServiceNow from last night here, Joel.
Yeah, let's do that.
Another example. ServiceNow at one point in time was down almost $50 on their earnings report, and it's come all the way back before the market's even opened. So NOW, if you look, go down, tick like 407. Which will put it down $41. It's now down $6. I mean, obvious what's happening. People are sitting here underneath demand on everything growthy because they're underweight all that stuff from last year, from selling it all at the bottom. And they're looking to reallocate money into tech and into growth. I don't know when it changes. This January effect has been going on for 4 weeks now, but it continues. So we can't argue with it.
All right, ServiceNow came in with an EPS of $2.28, beat the $2.02 estimate. Sales of $1.94 billion in line. They do see Q1 subscription revenues at $1.99 billion to $2 billion, up 22 to 25% year over year. When I look into this earnings report, it doesn't look bad. So I don't know why they hit it in the first place. And that's how another thing that I've been seeing is that some of these earnings reports, they're not even bad, and then they still get a hit, but then climb it right back. So earnings reports right now, very hard to get a read on particularly which way the stock's going to react.
Let's go right back to the January effect on all these things. They don't like any of the winners from last year. They like all the losers from last year. And IBM is a good example as well. People are like, do I buy the dip on IBM? I would say no. You know why? Because IBM was a winner last year. There isn't the bag holder sitting in IBM. IBM was actually up on the year. So it's the rally to value. Right now, just as much as all year the relentless growth to value trade happened, in 2023, we are seeing value to growth. Look at where Deere is. Look at where Deere is, not participating in the rallies. Why is that? Because it's a value stock. It's got the lower PE. That's the stuff that they don't want right now. I do believe eventually it will switch back. But right now, we can't argue with what's happening. IBM is like lower PE, value type name, NOW, higher PE, growth type name. The rotation is from value to growth right now. If you're buying the IBM dip, you are fighting the rotation. So again, I don't know, a year or a month from now, 2 months from now, maybe we're talking a completely different story. But in the market that we are in right now, growth is outperforming value, and they are selling value stocks, and they are buying growth.
Nice rebound service now. What can we do? Can we get unchanged, close near the high of the session? So a lot of people got jammed on that print. So they'd like to see that close at 448.77, right up there near the high of the day. Little roadblock here. Your rebound, all the early buy the dippers here. Let some stock go at 445. So those are your two levels on the upside, and you just have to do a reset now on the dailies. I don't even know if you're going to get a look at yesterday's low at 27.28. So yeah, you missed the buy the dip opportunity, at least for now. Resistance a little bit easier, a little more well defined than the support in this one, but nice rebound for service now.
All right, just to give the IBM numbers, we already kind of talked about it, but adjusted EPS $3.60 in line, sales 16.69 billion, beat the 16.4 billion estimate. IBM for 23 expects 10.5 billion in consolidated free cash flow. IBM tried doing the layoff, right? They did layoffs 3,900 workers as a result of a spinoff and healthcare data analytics business divestiture. So there you guys see it. IBM. I still like that monthly chart, but right now, value not in favor.
Value's not in favor. Start with the top-down approach when you're trading. I don't know. The investing's a different story right now. Maybe you're going to be happy to buy some of these value stocks. Like I said, I have been buying a couple of value stocks on the dips for the long-term portfolio. Those are multiple year time horizons. But I would say from a trading perspective, I'm buying dip on growth. I'm selling rip on value because that is what is in front of me. That is what is working. That is what is paying the bills at this moment in time.
I don't know where you buy the dip in this one. I mean, after that,
it's value.
Yeah.
First of all, I don't want to buy the dip. So
right.
I mean, you've got to be cautious. You could say 137. Maybe they're just going to buy the dip in IBM too, but this isn't the kind of stock they're buying the dip on.
Well, first of all those buyers at 140 are shaking their head now. So that's going to be made when you have that many lows in the same area, then you crack through it. That's going to be some long-term resistance there at 140. And for me today, just the first stopping point would be this 135 area. There's an area of three lows, right? 134, 135. So that would be the first target on the downside, and then you could just figure a retracement on this one, and you go if you just want to be patient in this one on the short side. I mean, why not give back half of the move? 15. Let's just call it a 40-point move. That takes you back up. That takes you right to that 135 area too. So just short term, yeah, high of the move 153.21. So first stopping point on downside for me, IBM 135. And if it gets anywhere near 140, I think it's going to be littered with offers.
All right, let's keep going. Let's go to Las Vegas Sands. Not really Las Vegas Sands, should be called Macau Sands, but we won't get into all that. EPS loss of 19-cent, missed the loss of 9-cent estimate. Sales of 1.12 billion, missed the 1.18 billion estimate. What do you guys feel about the casinos?
They've been in favor for a while. Again, massively oversold. They had the October rally start, and they have not looked back ever since. So these kind of are like in-betweeners because, they had a little bit of a rough 2022, but they were coming back towards the end. But, again, these stocks they've continued to buy. What they don't like right now is the flat-out stocks that outperformed in 2023. Maybe, you still got the Exxon, the Chevrons, because, wow, what a buyback in Chevron. We'll get to that in a minute. But unbelievable, these casinos. These things have rallied so much now. When end of October was 53, it's 102. It's up 100% in 2 months. Can't argue. Wow. There's been some impressive moves off these lows. Las Vegas Sands basically doubled as well. $30 up to almost $60 here now. Impressive moves. Earnings fine. People still doing stuff. Recession's not imminent. I'll tell you that much.
The Tillman Fertitta rally, he's kicked it off and when. I know I mentioned that, but just going back to when, I can look at the chart and I believe it might have been on this day right here, back in late October. Old Tillman mentioned that he bought a bunch of
He's
shares.
killing it.
Never looked back, man.
He's killing it.
Never a gap fade. I think the analysts helped him out a little bit on that one. Las Vegas Sands, we did back off the pre-market high, so you got some heavy lifting to do. 58.60 is your pre-market high. The fact that we backed off $1.60 for that makes me think you might have missed a chance to sell this in the 58 handle, so you might have to lower your expectations. Easier to find support here. You had 3 highs. Let's just call it 50. Well, yesterday's high 55, 51, but there's 3 other highs in that area. So I think on a dip, your short-term sellers, you start to find some buyers under 56 for this one. Win got a pop off this as well, so we'll take a look at Win. China's helping out with this too, the China
For
rally.
sure.
Yeah.
Relentless China bid.
Yeah. 104, you spiked to. Easy to give you support in this one. You had all these highs bunching up around 100, so I'll call 100 support. I think you have to pick something ahead that 104. Nothing on the monthlies. This thing hasn't been in triple digits since November of 2021. But you know what? What about DraftKings and Penn? Are they participating? Yep, look at that. Beginning of the year. Look at that DraftKings.
Same thing.
Yeah.
January. It was a simple trade. Just had to stick with it. It was hard to stick with.
Yeah, it was hard.
Shakeout
because
2-3 days in.
Mhm.
They made new
That was
lows,
it.
a lot of them. Even
The
the
majority-
Rivian. Look
and
at
a
the
lot of
Rivian
people
that
got
I've been
shook.
in.
A lot
That's
of
been a
people got
hard
shook,
trade to stick
you know?
with.
Yeah, I mean, they went to
Take
lows,
out the
a lot of them.
lows. Gil Morales undercut and rally trick. I mean, if you have any type of risk management or stops, you can stop out on all this stuff.
You know what that also
the
shows
best
me?
way it's been is just to ignore all risk and just hold the stuff. And if you continue to hold, you've been doing well. Tricky market.
The truth is also is that, let's just be honest, you have to be able to handle a little bit of volatility in this type of market. And so
Yes.
that's what was it also. I think it's institutionals were able to hold on their positions on that pullback and then watch it rise up. If anything, they bought the dip on that pullback
they're buying the
probably
dips.
for the January effect. And then that brought it up right back up there. So
Yeah.
I think right now, one of the things that I've been seeing, of course, is really high volatility. If you look at the hourly ranges, they're really big, right? And so this is the take your money and run type of market. We're seeing the buy the dip, sell the rip mentality just continue come in and out, in and out. So I think at least for right now, that's just the mentality that we kind of have to stay in. Buy the dip, sell the rip until we see a change. All right, let's go to Chevron. Of course, big increase in quarterly dividend from 142 to 151. Also announcing a 75 billion stock repurchase program. Yes, you heard that right. 75 billion, team. That's not no small little feat right there. And also, I would say that this chart looked like it was trying to play catch up. Talked about that on Stock Market Movers. You could see ExxonMobil trying to get to the 52-week high. I was like, Chevron's a little bit lagging behind this. If it can start pushing, if ExxonMobil could get up there, well, there you guys see it. Chevron came with the news today to push it higher. And I'm also going to be looking for Exxon probably to get through the 52-week high. What do you guys think?
I've got a position in Exxon, so I'll limit my conversation. It's hedged, though. So I have a position on Exxon, so I got to limit my conversation there. I don't have any position in Chevron. Its buyback's incredible.
That is a big buyback.
Yeah, like when that came out, I just lifted as much XLE as possible. And I was able to make a little bit of money there. Chevron was gone. The algos were all over that one, but there was some money to be made in XLE. Wow. I'm already out of the XLE, so I can talk about that. But wow, that's all I have to say is that's an incredible buyback. There's no doubt that these companies are minting money. We know that. I don't even know what to say. That's like, when's the last time we saw a buyback that big? I don't even remember one. 75 billion? It's not like 7.5 billion. Have we ever had one that big?
I would say Apple's had some big ones, but I don't know where that ranks up. And I usually poo-poo those kind of things. Are they buying it right now? But man,
I got some information for
What do you got for me?
Like always,
what do you got for me,
The
Mitch?
largest total buybacks in the last 12 months. It would include Apple, 91.3 billion.
Yeah.
Google, Alphabet, 54.5 billion. Meta 53.2. Microsoft's 32.7.
When did Meta do their buyback?
I think it was at least within 12 months of
I'm
this
just saying, did they
article,
rebuy
and
this
that
thing
was
at 250?
that was in August, August 21st when they did this article on CNBC. So I'll give them a little bit of a shout out today. We don't give them much, but they did this through the article, largest total buybacks, Apple included there with 91.3. So there you have it. That's probably one that was a little bit bigger than this one, but still pretty big up there. 75 billion for Chevron buyback.
I'm just going to give you one number in Chevron for the entire day, and that's that all-time closing high of 186.55. And that day you made a high above that, but let's say, actually I'm wrong. 188.05 is the all-time closing high. You didn't quite get there in the pre-market. Just make sure you get followed through this 186, because that's a big move. People are just sitting on any kind of shorter term profits. I mean, how can you turn down a 6.25 point gain? Coming back on the downside, you might have to wait a while for this to get back down to the top of yesterday's range of 180.03. Triple D. We got some
telling me to go
numbers
wide.
coming up. Yeah, go wide.
Yeah, I mean, we're still early. You don't got to go wide right now, Dennis. They're a little early to the gun.
Well, they jump.
Two,
They like
2.5 minutes.
Yeah, 2.5 minutes, team.
Do you have some previews for us on this? I mean,
of course.
Our CPI is kind of taking it. I mean, it's been about the CPI number, but what do you have for us?
3 economic data numbers coming out that I think are very important. There's about, a couple. There's like 6 or 7, but I'm just going to point to 3 that I think are important. Core durable goods month over month, December 2023. Estimate is negative 0.2, prior 0.1. What does this show? Weakening in the economy. We'll see if that keeps showing up. Initial jobless claims. Estimate is 205,000. Prior was 190,000. We don't want to see, let's say, 180. We want to see this get back into the 200,000, closer towards that estimate of 205,000 to show that initial jobless claims are getting a little bit of a spike. GDP quarter over quarter reading from Q4. We'll get an estimate of 2.8%, prior 3.2%. We'll see what happens here. Do we see a weakening in GDP? What will this affect? And will this change around the market, right? I know that everyone's focused on Tesla's earning this morning, but this could change things up, right?
Yep.
This could flip things around before the open.
It's going to chop things up. There is a buy the dip mentality under this market that is relentless, though. So I still think you're going to see. And remember, these things sometimes turn on the numbers. Sometimes at 10 o'clock. I always like my 10 o'clock turns. But I mean, the buy the dip mentality under this market is strong. I'll probably be buying the dip if we get a significant dip in this number. It's 50 seconds away. I will go wide. If we do get a dip, I probably
What Dennis means by going wide is that he has multiple positions and a lot of stocks. Also, he just makes some market in some stocks. So during a number like this, there's just less liquidity, he pulls his liquidity too, and he goes wider.
You've got to, or you get picked off by the algos. They're too fast.
Yeah, they are fast.
The news algos are too fast, and if you're sitting out there with an offer, they pick you off, and the stock's a buck higher on you. Or if you're sitting out there with a bid and it's a bad number, they pick you off and stock's lower. It's just a lose-lose for liquidity providers on these numbers. That's why they go really wide. 10 seconds here. I'm going to go on mute.
Okay, yeah, pre-market high 58.75. There is some significance to that because Monday's high, the yearly high, the high of the rebound has been 56.75 until that print. First move is down here. Coming up on mid-range on the session. Mid-range on the session was 43.25. I don't know if you got your print, if you got that yet. Yes, he went to 40.25. So right now, a little bit of a negative reaction here.
Initial jobless claims coming in light at 186,000. Not what you want to see there for initial jobless claims for the bulls. Core durable goods here coming in at negative 0.1 versus negative 0.2 estimate. So a little bit hotter than that. Still in the negative, so showing contraction. A GDP number coming in at 2.9% versus 2.6% estimate, showing a stronger GDP than expected here. That shows what? Well, I don't know if still bad news is good news is bad news. In my thinking, this means that the Fed can continue raising rates and continue pushing forward to their initiative of 2%. What makes me think that they can't go 50 basis points? I know a lot of people are saying that it's just a quarter basis points for this meeting coming up. I'm saying 50 basis points is still on the table, especially when you're seeing the GDP hold.
Still strong.
The initial
yeah.
jobless claims down to 186,000. Prior was 192,000. We're going in the wrong direction. At least if you think that this is what we need to kind of break the inflation out there. So, of course, some people can maybe battle with the soft landing narrative. And this is when it starts really getting confusing, team, because we've been on that kind of good news is bad news, good news. This could always flip around, right? Because if it's a soft landing, then this is good news, right?
Yeah.
This
yeah,
is where it
this
gets a
is-
little bit confusing there. I will say that even for someone that's watching the markets every single day, I can tell you it gets hard there.
We picked up some SPY in the 40140s. Just again,
That's a
just
spike down.
blindly buying the dip, working. I've already hedged off on that, but blindly, it's a scalper stuff, but just blindly buying the dip seemed to work there. We're still very early here, chopping around to Mitch's point. It's hard to interpret this
There you
data
go.
because you're right. You throw in the whole soft landing narrative, and you're like, well, this could be a soft landing. So, I mean, PCE tomorrow, Mitch. That's going to be the big one.
Bigger than CPI, because that's the number that the Fed likes to look at. And it's going to be right before their meeting. So if anything, they're going to just focus on that number tomorrow more than the CPI, because that's what they tell us. And it's closest to their meeting, right?
I mean, it's a big number. I wouldn't say it's bigger than CPI, but it's the number two. The number two number there. Like maybe they say they look at that number one. I don't totally believe it,
I focus what they tell me, Dennis. At least I focus on what they tell me.
This
until they tell
economy
me
stays
not
hot,
to.
though. I mean, the economy stays hot despite what Microsoft is warning us about, despite what Salesforce is warning us about. There really hasn't been this market here where they're just coming in the market, but there hasn't been this economy where people stop spending. They're still finding money. So I don't know when the gravy train ends. I feel like it's going to end here eventually, but I've been wrong. So you have to trade what you see, not trade what you think. And that's why I'm trading still from the bullish side. I'm still invested, bearish, but I'm trading bullish, and I can't argue with what I see.
Yeah, there was a nice dip there, real quick into the 40-40 handle. Got to 40-37, and
Did I pick up the low?
yeah, well,
I think.
that was for well, not that one. That was the low in the. I can check the low in the spider there, but that was a real quick dip. They bought it. I'm First things first, we were talking about, chasing, right? And I don't know how nimble people are. There was a little dip opportunity. So if you were long into that number, you took some heat. Let's see where the spider on the 1 minute got down to 399.22.
Oh, so I was in the 40s. I didn't see the 20s.
Right.
Looks like that initial jobless claims is the 9-month low at 186,000. So, I mean, jobs are hanging in there.
Durable
even though we're
goods
seeing all
up
these
5.6%, Mitch. Wow.
Yeah.
Again, we're on this tough. Avoid recession market here now. So when the jobs or when the numbers are a little bit hot, it actually isn't that bad of a thing. Like GDP 2.9%, the market's kind of switching its narrative to let's go cheer for this soft landing. They think the Fed's done. They think the Fed is ending, and it's going to be one and done, or, we got a couple more slight raises and that's it. And if we can keep going and humming along at this, the market thinks that we got the soft landing possibility. And I guess I've got to accept it. I don't want to accept it. I want to go full on rah bearish, but I can't when they keep buying the dips like this.
They got to give some time for those, the massive hikes to filter through. I know, Mitch, you're calling for like another half or whatever, but when we had Blue Putnam on months and months ago. He said, these effects, we're all like on pins and needles for the CPI number. He said it takes months, right?
Yeah.
2, 3 months, 4 or 5
Yes.
months to do it, to filter through the system. So far, it doesn't, as far as crushing the economy and crushing employment, that's not happening. I will just on the upside here. I know that we had the dip. One thing I'd like to concentrate on is like where we were before the actual number came out, and the last print before was 51 and a quarter. So if you get the a rally back over 51 and a quarter, let's shoot for the pre-market high, and which has been the high of the move, or the high of the week, high of the year, whatever you want to call it. So right now, Bulls still in control. I see
Big time in
Tesla.
control. I
Yep.
mean, they didn't even let it dip to, like, if we got this number and I think, we got this number 2 months ago, I think the market would be getting slammed on it. But we got this relentless buy the dip. We've got a change of sentiment that they're cheering for a soft landing now. So they think economic data, when it comes in a little bit better than expected, is actually a good thing now, which is normal markets. Joel and Mitch, this is normal.
I don't know about that. That's what I'm questioning now. That's the hard part. And I think that today you might see that flip of narrative, right? Where good news starts becoming good news, bad news becoming bad news again. That's what you need to ask yourself.
I think we've been seeing that. Yeah, where good news is good news, bad news is bad news. I think we have been seeing that.
Yeah.
Tricky market to call.
That's what I'm saying.
I'm just going to go back to impossible to call at a week out.
Yeah,
really is. Let's just call it what it is.
Yeah.
This market is awesome to day trade. It's been a very good month again for day trading. You go with the momentum, you go with what's going. The January effect worked. The relationships are still working. But you're trying to call where we're going to be a week from now? I have no clue. Where we're going to be a month from now? I really have no clue. I feel like we're going to be lower 6 months from now, but I might be wrong there too. So it's a really, really, really hard market to call. And you know what? If you're trading and you're just reading what's in front of you, you don't have to call the market. Everybody thinks I have to make calls to make money in the market. Just trade what's in front of you. Trade the relationships. You can visualize that in all likelihood, the dips are getting bought. I mean, it's stupid, blind, dumb trading, but that's what's working right now. Look, we just got a dip of 8-9 S&P points. They can't stop themselves, Joel. They've already bought it right back up.
Yep.
Back you can't argue with that. If you're bearish, I don't care if you're bearish. You got to be trading bullish right now, because after yesterday, the Bulls
dug in.
Complete control.
They said, "Yep, okay, take us under 3,900." And also, I'm just bringing up the TLT in the bond market, and I mean that's telling you that they rate. Look at that. That thing bottomed in late October, right? I'm looking at the 30-year bond here. I mean, they're it's been quiet up here, kind of consolidating, but the bond market, I kind of told you the Fed got ahead of itself. October, we had the December dip. But is Raghee in there? Do we have Raghee in the background?
Let's go ahead. Let's talk
Raghee,
about
see what
this.
she thinks.
Yeah, let's talk about this with our guest. Raghee Horner, Managing Director at Futures at Simpler Trading. Welcome back on. How we doing?
We're doing good. Great to see you guys. Looking at this this number, and kind of interesting contrast here. I'm looking at the bonds moving lower in response to that number, and then I see Fed Fund futures just almost 100% likelihood of reaching that 4.5 to 4 3/4 level, which we could argue between 4 3/4 to 5%, and that 5 to 5 1/4 on Fed Fund futures. That's our terminal rate. And just like you guys were talking about earlier, I think the market, right? Investors, traders are thinking we know what they're doing, which is we're going to stop at this level by March or May. And then the cuts start becoming just a conversation by November. It's wild.
Why do they cut though, Raghee? If the economy stays strong, what is the reason to actually pivot and start cutting? Why?
I don't know that they have to. I think that Fed Fund futures are saying that they could. I mean, it's a 35% possibility that they cut. It's actually 28% that they hold if we take a look at the Fed Fund futures. So not something they have to do, but they could. Let's say come 6 months from now, the R word is being thrown around. and recession is the conversation, they've rearmed, right? They've got another, bazooka once again that they can say, well, recession's here, but we can start cutting rates, which is why I'm not concerned about recession from a trading perspective.
So, because even if we go into recession, there's so many bullets to take us out of the recession, and that's a fantastic point. I mean, they've never had bullets like this in years. Like we're sitting up here, they can do a half point. Just think about how many bullets they used during COVID. And, and we were like, cut the rates, cut the rates. I mean, now they have so many, like they are loaded right up with an armory here. So, I mean, that's a fantastic point too, that even if the economy starts to show signs of recession, the Fed can keep it going, and the Fed could turn on our sides. How do we get the Fed on our side? How do we get them to actually, say, okay, we're going to stop raising despite a strong economy? Is that possible?
I think they don't have to say anything. I think we're more educated, I think, as traders and investors, even on Main Street, than we were before. We're bombarded with more information. I think when we look at those target rate probabilities, even if folks watching television, right? I'm not going to say our group here, we're much more in tune with the nuances, but even folks watching TV are going to hear that rates are going to peak. This is the terminal rate. This is where rates are going. I think y'all were talking about bonds. Bonds are front running this conversation. You look at bonds trying to front run this by 6 to 8 months. We're already seeing lower yields. So that's calibrated into the market, whether folks understand it or not. We do. We can use this information to arm ourselves and make better decisions, but I don't think they need to say anything. And I'll give Powell some credit. They've only been talking hawkishly when those Fed fund futures start looking like a sub 5% terminal rate, and then they just sort of walk us back up. So there's a nice give and take there on maybe that target rate probability, maybe those Fed fund futures being this two-way radio that we're talking to the Fed, but then the Fed's talking back. And that's the way I've been seeing it. Easy to measure.
When did you say, according to the Fed funds rate, when did you say that they, not that they're going to, but when did you say they could? How far out was that looking?
So peaking in March, possibly,
Uh-huh.
with a 4.75 to 5% or 5% to 5.25, which has been pretty much where we've expected rates to be on and off for 6 to 8 months. But the cuts are a conversation that we could start as early as November. Not probable,
Yeah.
but again,
Okay.
just possible.
I'm just, and I've kind of been in this camp for a while. I think just the stabilization of rates is so much more important than, than relentless raising of rates. And also, I think the Fed would have started earlier. A little thing, the pandemic kind of, interfered with that, right? And they had to pump a bunch of money. So I'm not, I think, there's a lot of people that are, I'm not on that pivot. I'm just looking for, I think, the stabilization of rates, and you can get some decent returns on your money if inflation comes out. I heard this guy from Starwood. Did you hear him on CNBC? He said he thought inflation was going to be negative by June. Negative by June. I think that's a little bit, he just thinks that the Fed is just way overdone. That's a little optimistic, but I think it's more the stabilization of rates, maybe, bounce around in this, 3.5, 4.5, 5.5% range for a long time. I just don't, I mean, I think it's going to take a real major slowdown for the Fed to even considering doing it. But I just wanted to talk to you about the overall market here, because when we had you on at the end of the year, you were trying, there was a couple key points that you had that you wanted to see in the market for the turn. And we were just talking, the growth turn was, like Tesla made a new low 3 or 4 days. How did you, that little shake out there? I guess maybe because we look at the markets all the time and we see these shakeouts. How did you manage that first week in January and to stick with your original plan?
The first week of January, it was tough. It was tough. My thinking is, as long as I'm not over trading that first week of January, as long as I'm focusing on risk management, and I am thinking about, this is bottom picking season. I think that's what we might have touched on. January, February, it's bottom picking season. Tesla is not as important to me for the broader market reflection as, Amazon, Google, Microsoft, Apple. It's there, but it can do its own thing. It's a bit of a wild card for many, many reasons. The thing that I'm going to see and that I wanted to see was that the euro's moving higher, which means the dollar's moving lower. It's one of the easiest and most accessible ways to measure dollar movement. That euro is in an uptrend. My 60 futures traders, FXC ETF, keep an eye on that, right? And then I see ZB breaking the downtrend and trying to climb higher. TLT trying to climb higher. So now I have weak dollar as reflected in the strong euro. I've got lower yields as reflected in a kind of ugly grind higher, but a grind higher nonetheless. And in the long bond, even the notes are starting to come on. All right, then I start looking at what else could be indicating some optimism. Copper's in an uptrend, right? Gold's in an uptrend. So gold telling me that real yields are narrowing. Real yields are what? The nominal yield of a bond minus the rate of inflation. So gold's in that great uptrend. Copper's joining it. If I look at all the evidence, and again, Dennis said it so perfectly, trade what you see, right? So I don't want to think of, who cares what Raghee thinks? I'm going to talk about what I see. I get trapped into that, right? So trade what you see. And if I look at the evidence in these really important markets, it's hard not to be a bull. And this isn't something that snuck up on us. It's been just slowly organizing and clarifying for a few months now. So I'm still on the same page as I was when we spoke last, which was great, which is, hey, this is the Federal Reserve messaging. This is where we're going. This is as bad as it gets. Let's turn the page.
It's hard to do that. And I mean, I've probably been able to do it because I'm trained 23 years and I can trade from the long side, even though I'm overall bearish. How do you actually, first of all, just stop, thinking, and then just trade what you see? Go in more detail how you actually can implement that, because I think the majority of traders very much struggle with that. They get an overall opinion and then they can't break that opinion and they think they're eventually going to be right. I think I'm eventually going to be right on the bearish side too, but right now I cannot be short stocks because the market's telling me not to do that. So how do you separate it? How do you separate opinion from trading?
My partner here in the office, she's got a great thing that we talk about from time to time. It's one line and it stings. It's like salt in a wound. How's that working out for you? She'll tell me that all the time. I've got this position on, or I've got this idea. How's that working out for you? And boy, it's tough. But then I think to myself, how do I measure myself? P&L. Is this working? Is it making me money or not? Yeah. It's just that binary. So the ego wants to be right. The trader in me wants to make money. And if I just measure myself once a week, once a month, so once a week, I'll measure myself as a day trader. I'll look at 4 or 5 days of trading and say, on Friday or Saturday morning, I'm sitting down with a cup of coffee and I ask myself, how's that working out for you? And that's the differentiating factor for me. What I want to see, who cares? What am I seeing? What is working? And that's when you said, exactly, trade what you see. And I think the most difficult thing is, and this is something I taught myself over the years, we've been trading both for decades now. The market's a front-running machine, bonds especially. But we're not thinking about tomorrow, unless it's earnings. But we're not thinking about tomorrow. We're thinking 3 months, 6 months, a year from now. So everything operates trying to look around the corner. And I think the only way we can look around the corner is measure as best we can what we think the Federal Reserve is going to do, which is really the only macro to speak of. Why do we look at growth? The Federal Reserve does. Why do we look at inflation? If you think about what Mitch, you said it, that what are they telling me? That's all I care, because what they're telling us is policy. Policy is going to move the market even before they move rates. So I'm with you 100% there. But at the end of the day, we measure ourselves with the points on the board. And for us, it's dollars. So I think we get pretty immediate feedback. I love the question.
One question that I have, and kind of a follow on that, right now, we've just recently started doing a little bit more of a book club. Right now, we're going through Trading in the Zone by Mark Douglas. But I wanted to ask you, Raghee, what kind of book suggestions you have for maybe skills like we just talked about? Any suggestions? And we see that great book collection behind you.
This is just a background on Zoom. No, I'm kidding. No, I mean, I've really not been reading trading books probably consistently the last 20 years. Most of what's on the bookshelf right now are things like willpower doesn't work, mindset. A new one's 10x is easier than 2x. That's something that I'm really diving into. And I think a lot of traders, it's a tough thing, but it definitely is a mindset shift. we think about 100% of what we're doing. The 80-20% works. The Pareto principle is true in everything. What is the 80% of these habits of dogma, of fear that we can't let go, and the 20% of things that are working? We have to be willing to get rid of that 80% and go all in on the 20 that's making us money. That's how we 10x. And it's actually easier to 10x, but it requires letting that 80% go. Doubling is what? Hustle more, do more work, do more effort. And you can 2x yourself as a trader. You can 2x yourself as a human. But to really 10x as a trader, we have to be brutal about, what is this dogma that I won't let go? Why do I think that bonds can't climb and equities can't climb together? Why do I think that gold is a safe haven when it's really not? Those are things that are hard to let go. And I think when we can, that mind shift change is easy.
Raghee, just quick question here. As far as turns in the market, and obviously we had this January effect, rolling, continuing into the later part of the month, and everyone is just the way the market reacted, and these growth stocks were in 2022. How do you try and come up with targets on the upside, or do you just try and have a mental stop, move things up, let the market take you out on the downside? Because, catching turns obviously is, a lot of way to capture profits, but a lot of times a good sale one day, 3 days later, it looks like a horrible sale.
Structure for me dictates strategy, and strategy dictates the indicators I'm going to use. So if I can prioritize those uptrends, whether that's a 5-minute chart, 1-hour chart, daily chart, weekly chart, I prioritize those uptrends. Uptrends are where buy the dip works. What's a dip? It's a retracement. It's a mean reversion. So I think a lot of the things that have turned into memes over the years, they work because they worked for 100 years. So buy the dip in uptrends. Buying the dip in gold has been amazing. I think buy the dip in copper is going to continue to work. Then I think to myself, all right, what's my time horizon? And I think right now, shortening the time horizon, to your point, is going to make a lot of sense. What works today, 3 days later, seems like the dumbest thing ever. So why not say, step away from expecting a daily time frame to trend like it did in 2020 or the first half of 2021, and say, hey, what can I do on a 1-hour chart? Yes, it's short, but it's not so inaccessibly short that we're suddenly day trading and having to stare at the charts all day. We can free ourselves to live our lives and look at a 1-hour chart. And that's where I'm finding a happy medium, which is that time horizon of 1 to 3, maybe a few more days, and then resetting my opinion, fresh eyes, and saying, okay, is what I saw then still happening now? So I'm just basically going back and checking, right? And observing every 3 to 5 days. And that's been working.
Well, thank you for joining us. Like always, Raghee Horner, Managing Director of Futures at Simpler Trading. And definitely, how's that working out for you? Nice quote that we'll stick around with today. Appreciate it. Have a good one, Raghee.
Thanks, guys. Take care.
All right. Talk to you again soon. S&P futures creeping up to the highs of the session here.
Yeah.
That was a dip. We called it. Is there? Buy the dip.
Wasn't there for long.
Well, it was like, between under 40.40, that looks like a good buy. Yeah. Unless you had your order out there, you didn't get a good buy here.
That's why it was hard reading the numbers, right? Because I didn't know to tell you guys if good news is good news and bad news was bad news anymore. And that can easily change,
bad news
right?
is good news, and good news is good news. Mitch, we're back into that market here again.
Oh, is that how it's working?
That's how it's going down right now. Bad news is good news, and good news is good news. Because if it's bad news, they buy the dip, and it's good news, they just go. So, that's the market we're in right now.
Yep.
So
again, narratives.
You got to separate it right now. So what was working in 2023 for the most part isn't working as well, or what was working in 2022 isn't working as well in 2023. There has been separation here. There's certain stocks that, like IBM, like I said, I would not buy the dip in this thing for the simple reason is that that's thrown in the value bucket. I'm not buying value stocks on dips right now because the market's not buying value stocks. The drugs are all in the value bucket. They're not getting bought on the dip right now. It's, complete separation, complete mirrored from where we were in 2022. Again, there's some outliers. Energy is still relentlessly getting bought. So there has been outliers, but what's really making the money here is the beaten down growth names.
And
right.
now, what about the Kathy, right? Kathy's looking good.
We're beating down growth names. It's her. Those are the kind of stocks you want right now. Look at her fund. That's the stuff you're buying on dips right now.
Yeah,
That's the stuff they were buying yesterday. That's the stuff that's working. So is the Kathy low in? We don't know. Again, impossible to predict the market even a week out, let alone a month out or 6 months out or a year out. Who knows? All new information will come in. We don't know how the war in Ukraine is going to go. We don't know China. So we don't know anything. So no point in predicting that far out. Again, it's fun to do. It's fun to be right. Like Raghee says, my ego wants me to be right. It's about ego. But you know what? The bills, putting bread on the table is about making money. And right now, you're not making money shorting stocks.
What about the Mobileye here? They had some good earnings. I hate to bring that stock up because we didn't get any of that, but just want
I'm
to.
so mad about that still.
Yeah. I guess we could have just went out and bought it here, but Mobileye getting a nice pop off its numbers. Real quick, we did not do any of the airline earnings. Do we want to do any of those or not?
Well, we
Really
already knew the AAL numbers. They had already
Yes.
preliminary numbers had already come out, so we can do them all together. So you got Love is disappointed. JetBlue is down as well. AAL is up. We already knew their numbers. ALK is trading slightly down. So you had 4 report this morning. Was there any others, Mitch?
No, I think that's all for this morning.
Yeah,
But
so
I mean,
Powell-
they're in
Powell-
favor right now. I mean, just look at the charts. I would say they're in favor right now. Look
think
at
so.
UAL. Look
Yeah.
at UAL came down for
Yeah.
just about one day, came into that gap, and it's right back up.
Yeah, that dip was a buy because those earnings were just so good, and they're talking about making $10 a share, and like the market was calling the bluff, and we honestly just should have turned around and just bought anyways. It went from 55 that morning
That earnings
down to
were
46 the next day. That was a hell of a dip to buy. So Raghee's right. Stocks are trending higher. Again, depends on your time frame. I'd say the growth stocks are all starting to turn and trend higher too. So you can argue, overall, if you look at a 1-year chart, these are still in overall downtrends. But if you look since January, they're definitely all in uptrends. So it depends on your time horizon as well. Short term, they're all in uptrends. The growth.
This the best looking chart here for me is look at this AAL 5 days in a row, 16 to 1650. Now you spiked over 17. If the bulls can keep control of the stock and keep it bid at 1650, then let's just work our way up. Let me see what the close was. That day. We've had a couple closes over 17. So let's see, it was 1708 is a high close in the move, but you've had you had the big move over 17 to 1750. You had the pullback. The good support is 16. Let's see if you could hold 1650 for AAL.
All right, now we'll see what happens on Amazon. Will we get to 100? I see you guys in the chat talking about it.
Holy.
It
looked like
We're
hell
close.
yesterday. I even said it. It looked bad yesterday, talking against my wife's book, and they just turned around and they bought the hell out of it. Like, it's amazing how quickly everything changes. It looked like the Microsoft numbers were going to put it was going to be a really bad day for the markets. The guidance was not good for Microsoft. They warned basically across the board, what you consider a warning, but they basically were warning across the board in a nice way. And they just turned around, and as soon as they started buying that Microsoft dip, they bought all the rest of them too. So yeah, it looks like it was a bear trap, like it looks like they got caught yesterday, and it looks like Amazon's eventually maybe going to get to 100 too. And I mean, these stocks are so beat up. So yes, the valuation's still high, but we know Amazon's always invested for growth, and they probably could make more money if they really wanted to. They just keep dumping it back into the company. But 180 down to 80. I don't know if anybody thought it was going to get that ugly. I didn't think it was going to get that ugly. I thought I thought it was going to sell off, and I had sold my stock, whatever it was, $3,200. So I don't know. You got to do the 20-for-1 reverse on that to figure out what that price was. But it's probably around like 160-ish. And I rebought, in my wife's portfolio at 110 because I thought that was enough. Went down to 80. So some of these stocks just massively overshot. These are good companies. Disney, same story. Have any business being at 85? If we were going into a hard recession, maybe, but I mean,
It's been
at a certain point in time,
the streaming is
you get down
really,
like 7-8 year lows on Disney. What do you want? I mean, and again, everybody hated me when I was buying that, and obviously I was early on that one too, and I'm usually early, but some of these have worked out. So I don't know. It's a really tough environment, though. I think you've got to be looking at your overall portfolio. You want to have some stocks. You want to have some cash, because I don't think anybody can predict where we're going to be 6 months from now.
All right, I'm gonna just wrap it up here. Your pre-market high, we're bumping up against it, 58.75. Former high of the move that was made on Monday at 56.75. You pull up the S&Ps here, and I like to give you guys resistance, but when there's no resistance in sight, there's no resistance. Your next daily high, which would fit into the 9-day average trading range, is 40.90.75. Maybe that's a little bit lofty on the upside, but that would be your next daily high. And we were talking about Tesla, and it's still chugging, man. It is up at the highs of the pre-market session. So
And
who
remember
knows?
what we said too, Joel. Tesla is your driver for all those beaten down growth names. So what do you think's going to be up today? You're going to have all those beaten down growth names. That is what's going to be strong. It doesn't even have to be an EV. Just anything Kathy style. It's when you're seeing Tesla rally 9%, you're thinking all those beaten down growth names again. And some of them are barely up here right now. Some of them are only up like 1% or less this morning. Some of these stocks end up being up 3, 4, 5% here today if Tesla holds on to these gains. So there's still an opportunity in some of these names. Maybe some of the EV ones like Rivian's trading up, I think 3 or 4%. Well, that's kind of a little bit too far to chase it today. But there's a lot of these names, these growthy names, that are barely up here this morning.
What about one that we brought up earlier in the week, Overstock?
Where's that? It's up it's up 20 cents. I mean, yeah, you're exactly right. A stock like this. A stock like this could go today. Like it's barely up over what the S&Ps are up. So yeah, I have no position in that. But you know, look through your filters right now. Look at what's only trading up. If it's growthy and it's trading up under 1%, it's probably not trading up enough this morning. So just keep that in mind.
Keep your eye on the Tesla driver. We got 160 in the crosshairs. So great information today, as always. And we'll check in with you guys later on. Everyone have a good day.
All right. I tried to bring in one there, Jim. And like always, got to do the hard work now. Start looking, right? Start doing the digging. That's what it's all about. Now that we know that at least the GDP number and economic data didn't just ruin the tape today. If anything, looks like they're going to support the soft landing tape, right? And I think that's what you need to start kind of filtering into baskets, right? There's multiple baskets that can happen now, right? I think that there's the basket of the soft landing, right? Start throwing some stuff in there, start thinking the mentality of that. Then there's the basket of kind of recession concerns, right? I don't know if you want to do with that. And then, of course, there's a little bit of difference, right? The economy weakening on the left-hand side. I don't see that. I don't see the economy weakening. I don't see the labor market weakening. So it's going to be hard to even get into that recession basket if that's not happening either, right?
My thoughts in my head tell me what the hell is going on. That's what is telling me in my head. So again, that's why I'm obviously torn. You know, every time we pull back, I think, okay, well, this is the start of it. But it's just, you know, like the numbers, you know, we keep getting strong numbers. It's like I have to, as a trader, be able to trade what's in front of me, like Raghee said, and stop thinking about your opinion, stop thinking about recession, trade what's in front of you. You don't have to invest. You don't have to go in here and load up your long-term portfolio. You can stay in cash, and you're getting paid for cash, 5.1%. I had my banker call me yesterday. You can tie up on GICs, which is, you know, on Ontario GICs, guaranteed on Bank of Canada. 5.33, 1 year out. 5.33 right now you can get me. So I'm like, that's not bad. That's not bad, 5.33. That's like, you know, we were getting like 1% on these things a year ago. Now you're getting 5.33. So that's not bad. So I think you want to have a little bit of cash, maybe tying up at 5%. You want to have a little bit of stocks in case the soft landing does happen. And like I said, I'm about half and half right now. I'm about half cash, sitting around 5%, and I'm about half stocks. And, you know, maybe I should be in the long-term portfolio all in, but I tell you, in the trading portfolio, I'm long stocks. I'm making money in the trading portfolio because that is what it's telling me to do. Yes, I trade market neutral, but I said to you guys on the show this morning, I'm biased long right now. So I'm biased a little bit leaning long. And, you know, I do have some swing longs on as well. And those are doing very well. It's been a good month for swing longs. First good month for swing longs in a long time. I mean, it's been a tough, you know, October really is when it started. The swing longs started to work. But I mean, it was a really tough year. You know, just ask Christian. You know, it was a tough year for swing longs. You got to be able to swing both ways, but there's a few of those working right now too. So trade what's in front of you. Right now, bulls are in control.
Bulls are in control for the time being, and I know there's going to be questions like Duncan Dave bringing in here. So what does Powell do when the economy isn't slowing? Well, these are all questions that you can start asking yourselves, and we'll be here to discuss with you guys. Like always, I mentioned it earlier today. Definitely, Dennis, have a good day. But I wanted to mention it again, team. We're not here to give you guys 100% outlook of what's going to happen. I'm sorry, we're not Miss Cleo, but we're here to go ahead and tell you guys what we see, right? And I think a lot of that time you're going to see Dennis being what? Flexible. And a lot of that, why? Because he's in the markets every single day, almost every waking second, but he takes a little break. But that's what it's all about. And I think one of the major things that we need to always keep in mind is that we need to be flexible. Right? We're never going to give it to you the 100%. We can't. We don't know what's going to come next, right? And you don't need to know what's going to come next to make money. One of the biggest quotes from Trading in the Zone, right? And the big part of that is what? Just trade what you see. That's what Dennis is trying to tell you right now, right? As much as his ego might be saying to the short side, as much as my ego might be in the bear side, right? We always got to be flexible and trade what we see. And there's always that quote, right? Price doesn't lie. And a lot of that is that the truth is price is moving up. Price is moving up. You can want to fight it all you want, but that's the truth, right? I think that that's what we need to be looking at right now. Of course, this can always change. And you guys are seeing the narrative seem to change right now towards more soft landing. And for a while, if you go back, you can ask economists 6 months ago, just look at some of their interviews. They would have told you soft landing. Yeah, that's out the window. That's never going to happen. That just goes to show you, even people with master degrees that have been at this for 20, 30 years, they're still going to get it wrong. What do we need to be doing as investors is doing our own research, being flexible, and most paying attention to the price action. All right, that's going to do it for me today. Pre-market prep. You have a good one, Dennis. Look at my man. He's at work. You have a good one, my friend. All right, we're going to get you over now to live trading. Come and check out what we trade today. Yesterday was able to get a slight short on Apple. It's a battle, right? We'll see what happens today. Do we take some longs? Do we start getting the boost back up? Are we going to 410? Who knows? Find out all on live trading coming up next. And of course, if you guys want to join the book club, we have a lot of members joining up. As of recently, we just increased about 50%. Why? Well, because you guys want to come and check out what we're learning on the book club. So want you guys to go ahead and check it out. Check out right now, Trading in the Zone. We're going to go through Chapter 2 and Chapter 3 this Sunday, 9 a.m. Eastern. You don't want to miss that. And stay tuned for an email today. You guys that join the book club will be getting your email today. So you guys can RSVP and join the conversation. Yes, I said it. Join the conversation. You guys get to talk with me. We'll go through questions. We got Christopher Udall that's joining us also from 10-Minute Stock Trader. Don't miss it, team. I'll see you guys on Sunday. And like always, up next, live trading. Hit the thumbs up. Let's keep going right here on Benzinga.